market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, expectations of a Fed rate hike are lower, but the U.S. carries out more military strikes against Iran. So we discuss the inflation outlook in just a moment with Mohit Kumar from Jefferies. But first, ASML has lifted its annual sales forecast for the second time this year. That comes as a surge in AI spending drives demand for the Dutch company's chip-making machines. Now, ASML remains a key part of the semiconductor supply chain. Let's get more from Shona Ghosh, REMEA tech editor. Shona, thank you so much for being here. I mean, this is another blowout for, the most valuable company in Europe. So what's really driving this demand? AI.
Morning. Yes, it's very much artificial intelligence. So ASML, as you pointed out earlier, is a key part of the semiconductor supply chain, which means it basically builds the machines that make the chips. It doesn't make chips itself. So its biggest customers are chip makers. Now, if you look across the board at SK Hynix, Samsung, Intel, all of them have announced that they're building new fabrication plants, i.e. the factories where they make and manufacture chips. So for those, they need ASML's machines. So the more fabs that are being built, the more you'll see demand for ASML's equipment. Why this morning's news is very positive from an investor point of view is not just about sales. We know that everyone wants ASML's machines. They are very, very complicated to make. They are made in a modular fashion. So actually a really important part of the results this morning was ASML saying we are going to be able to make more machines over the next couple of years. So it's about meeting demand, not simply seeing rising demand.
How significant is it that Intel is using some of their most advanced chips?
Yes.
Or chip-making machines.
Exactly. Yes, so the top of the line, very cutting-edge machines that ASML is producing cost $400 million a piece. So that is very, very expensive for context. It's a lot of money. And Intel announced this morning that they're actually using one of these machines in production. That's positive news because, as I say, the chip makers are ASML's biggest customers. Intel isn't actually the biggest, but it's significant. It's a significant player, clearly. So announcing that these machines are not just about use in research, but about the actual day-to-day production of chips is a very positive sign that there'll be future demand for these very expensive machines. By contrast, ASML's biggest customer hasn't said that. It said these machines are too expensive for us to use right now. So it would be even better news if TSMC sort of said something similar, but it's pretty positive news that Intel is saying this.
So interesting. Shona, thank you so much for joining us. Shona Ghosh there, REMEA tech editor. Now, as the AI trade gathers fresh momentum this morning, my next guest says AI is following the classic position unwind cycle. I'm joined by Mohit Kumar, Chief European Economist and Strategist at Jefferies. Mohit, as always, thank you so much for joining us. I mean, there's many questions on AI. If we start with valuation, I mean, they seem to be more and more supported because we're seeing use case. Is that fair, or do you still have many question marks about the valuations?
The valuation part I'm comfortable with because earnings are still strong, capex is still ongoing. I think the part where we start getting a bit uncomfortable is expectations, because expectations are very high. And that's why, for us, one of the most important things to watch, purely from a market perspective, is looking at positioning. AI trade is a very crowded trade. And that's why I mentioned it's a classic position unwind, because positioning was very heavy in June. And what we have seen in the last few weeks is an unwind of those positioning. So medium term, still positive on AI, still positive on the picks and shovels trade. But we have to bear in mind that expectations are really high.
And so what does that mean in terms of your positioning? What are you buying or selling right now?
So we took a step back from tech. Early June, we took a step back thinking positioning is too heavy. Now, if I look at the positioning, is much cleaner today. So I think we're getting to the levels where we are ready to go back into the picks and shovels trade. Because medium term, we are still positive.
Mohit, I mean, overall, what's driving equities right now? So I know there's a lot of questions about geopolitics. I mean, oil actually didn't really behave like the majority of investors thought it would, or certainly of analysts. Maybe investors knew something that the others didn't. And then you have, of course, Kevin Warsh, and we're still trying to figure out what happens next with the Fed.
Well, like you said, these are the two things driving. So, oil, I would say more it's central banks, whether it be the Fed or BOE or ECB, and AI. But to me, it's central banks and AI which is driving. And when I read Warsh, everyone tries to say, is he hawkish, is he dovish? I actually have a slightly different take. I think Warsh is positioning himself into the credibility camp. He wants to say that he's credible. Inflation is not something that the Fed wants to tolerate. But the key word is sustained inflation. And in our view, when we look at medium-term inflation forecast, inflation is still likely to move lower. Of course, it depends on how long oil prices stay at these levels. Do they go higher? So a lot of uncertainty. No. Fully agree. But you look at inflation break-evens, which is the medium-term expectation of inflation, they're very well contained. So as long as medium-term inflation is contained, I don't think the Fed needs to hike rates.
Yeah, I mean, for me, Chair Warsh, and you're really right on the credibility part, but he also had a great reputation, right? He's been Fed governor before during the financial crisis. And for me, what was interesting is when they were talking about the fact that, he didn't need to raise rates, and that was appealing to President Trump, he was looking at it from an AI perspective. When do we have to actually start looking at AI impacting our economies instead of the valuation question?
So when we think about AI, actually, paradoxically, initially AI is inflationary. The first few months, first few quarters.
Because of the spending.
Because of the spending, also commodity prices. Electricity prices, or you look at copper or commodities, they will go up. Medium term, it should be deflationary. So it leads to improved productivity, but lower inflation. But medium term, we are talking of 2 to 3 years. So the question for Chair Warsh or any other central banker is, do we look through that initial impulse of higher inflation and focus on the medium term, or we focus on the near term? I think oil adds a lot of complication to that picture. So end of the day, it's about credibility. The Fed has to respond to whatever data it is. I think Chair Warsh is genuinely one of the best candidates. I don't think he is going to be politically driven, but he has to respond to data. And if medium-term inflation is anchored, they don't need to hike rates.
Okay, Mohit, don't go anywhere because we're going to talk about the Middle East in a second. Mohit Kumar, Chief European Economist and Strategist at Jefferies. Now, the U.S. has carried out another round of strikes against Iran after reimposing its naval blockade. Well, President Trump has backed down from his plan to charge a fee on cargo shipments through the Strait of Hormuz, but continues to threaten more military action. Let's bring in Paul Wallace, Managing Editor for the Middle East and Africa. Paul, how significant was the president's climb down on the idea of a Hormuz toll, and what does it reveal about U.S. strategy?
Hi, Francine. It was significant, I think, not because people in the world of shipping or here in the Persian Gulf, where I am in Dubai, literally thought that the U.S. was going to charge 20% on all cargo or all ships passing through Hormuz, because this was something that was announced out of the blue by Trump. It's a huge fee. It would have meant roughly $35 million for the biggest oil tankers. I mean, these were fees that were way above what even Iran itself was saying it wanted to charge for ships going through Hormuz. But the fact that Trump reversed or did a U-turn so quickly within 24 hours, I think it underscores just how frustrated he is with Iran right now over Hormuz, and how he's struggling to come up with a strategy to get the waterway open and then to eventually end this conflict once and for all. So it shows once again how the US president is sort of vacillating between different tactics and different moves because of the fact that he's stuck in a bind over Hormuz and, by extension, the war itself.
Paul, what impact are the strikes actually having? Is there any suggestion that it could have more of an impact than before?
This is hard to tell. I mean, in markets, we've obviously seen oil shoot back up to about $85 a barrel. It's up 13% this week. Still way below its highs from late April, but, still up significantly over the past week. In terms of the damage it's doing to Iran, that's difficult to tell. The U.S. says it's striking a lot of things like radar sites and missile and drone sites, but Iran is not backing down, and it itself is, if anything, escalating its counter-strikes on the likes of Bahrain and Kuwait. Kuwait saw heavy attacks from Iran in the early hours of this morning. So at the moment, both sides are being very stubborn. They're not bending. However, we have been here many times before in this war that's now more than 4 months old, almost 5 months old. And it is at times like this when the US and Iran have actually got back to the negotiation table and worked out some kind of temporary easing of tensions, and it's something we could possibly see again in the coming week or so. Trump, it's just worth noting, he says he's going to escalate U.S. strikes on Iran until the Islamic Republic comes back to the negotiating table.
Paul, thank you so much. Paul Wallace, our Middle East and Africa managing editor. So let's get back to Mohit Kumar from Jefferies. Mohit, I mean, the big problem I see is that it changes all the time because it's unclear actually what the real U.S. strategy is here. So how much does it complicate things for investors?
Well, I think no one really knows what the U.S. strategy is. And I think what Paul was mentioning, and I fully agree, there is midterms coming. Trump cannot afford oil prices significantly higher because he could lose the Senate. So he is worried about oil prices. He wants to get out. But the question is who controls the Strait? Iran wants to have control over the Strait, and for U.S. it's totally unacceptable. So I think what could happen, and this is one of the theories I have, we could get some form of fudge in the near term. So we get a deal, make sure oil prices are $80 or below $80. But I do believe that Middle East is fundamentally unstable today compared to pre-war. So post-midterms, when Trump doesn't have these concerns, it is possible that we could escalate even further. So I fundamentally think we are in an unstable situation.
And of course, if the price of oil goes higher from here or even stays at these levels, it feels like it's, the UK and the Asian economies that will suffer the most.
Absolutely. So if you look at the 20 million barrels that comes out of the Strait, actually U.S. gets less than 500,000 barrels.
Yeah, they're fine.
They're fine. It's Asia which is the most impacted. And it's not just about oil, it's also about gas. You look at a lot of South Asian economies, they're very dependent on gas. Europe is next, which gets impacted, and of course UK gets impacted as well. So purely from a growth perspective, it's Asia, Europe, UK, which are much more impacted than US.
So what does it mean for investment strategy? Are there question marks about emerging markets that, frankly, so far have had a great year? And is that a question for next year or mid-2026?
But emerging markets, there is a divide. So the way we are seeing it is the divide between commodity producers versus commodity importers. Yeah. So if oil stays at these levels or goes towards 100, it's the commodities importers that get impacted, which basically means if you think about Asia, the South Asia belt is the most impacted. But if you're talking about markets like Korea, Taiwan, or even China, China does get impacted, but there is a big tech sector as well. So the Far East Asia tech continues to do well. Europe gets negative on the growth, which means the consumer sectors get impacted. Yeah. But the tech sector doesn't. Tech sector does not care what the growth is over the next 6 months. So I think it's about winners and losers. And as oil price goes up, I don't think it's fundamentally definitely bad because there is a big AI and tech boom that's going on. So it's about winners and losers and identifying even within the emerging markets.
Mohit, what's your take on the UK? So again, this is a small open economy. We also have a change of prime minister in the next couple of days and on the cusp of the World Cup. No, I don't want to jinx it, but the UK has its own set of problems if you're the Bank of England governor.
Massive. And I think what Bailey has been focusing a lot on is growth. And when we think about oil price impact, there is the growth dynamics and inflation dynamics. A lot of academic papers suggest it's almost equal and opposite. Mm-hmm. Bank of England has a dual mandate. They need to look at growth and inflation. So yes, inflation can be high, but as Governor Bailey has told us, growth picture is not great. Mm-hmm. In that scenario, we think Bank of England just does nothing. They don't hike rates, they don't probably cut rates, but they just stay the course and see how data evolves.
That's so interesting. So you expect also the same from the Fed. For the moment, wait and see. Mohit, thank you so much for joining us. Mohit Kumar, Chief European Economist and Strategist at Jefferies. Coming up, our exclusive interview with the boss of the consulting firm McKinsey on the impact of AI and geopolitics on business. That's coming up next, and this is Bloomberg. The conversations that matter, the insights you need. This is The Pulse, and I'm Francine Lacqua here in London. Now, the boss of consulting giant McKinsey says the firm is on the edge of a possible golden age as companies seek help with issues such as artificial intelligence. Well, McKinsey has cut staff from its support teams on the back of the AI wave, but he says they're also hiring more consultants and is set to grow headcount overall. In an exclusive interview, we also asked Bob Sternfels about the impact of geopolitical stability.
I think there's a potential that this is a golden age for us. a truly golden age. And the reason is the world has some really existential challenges and opportunities facing it. And you've had many people come on and talk about this, but you think about this AI moment, you think about complicated geopolitics, you think about a whole reset in the energy climate nexus, you think about changing demographics. These are all world-class problems to solve. And what we try and do is we try and work with CEOs on their most complicated problems. And at least we see over the next 5 years the complexity of those problems going up, not going down.
No, but so what's the biggest disruptor to any business? AI or geopolitics? Do you have to choose whether you're an ally of the US or China?
AI or it's like trying to pick, well, which kid do you like better? Like, these are two massive. You know, I would honestly, I think they're the twin biggest issues facing us today. And but by the way, I would say challenges, but equally opportunities. And this is one of the things that, you know, I always talk to if ever I meet a CEO, I say, okay, draw a line down the center of the page. And let's write challenges and opportunities from each of these topics. And it's easy to talk about the challenges. Will AI disrupt jobs? Yeah. Will it dominate the energy stack? Is it going to take everybody's water? But equally, you know, could it create and unleash a wave of growth that solves many of the other crises that we face?
So how do you use AI within the firm?
You know, it's like you talk to every leader, this is changing so fast. And, you know, what I would say is we're doing two things. One, the first is we're trying to help our clients. This is about half the work that we're doing today with clients around the world. And large enterprises struggling with, how do I really reinvent myself with AI? My costs are going up. You've talked about, you know, token costs going through the roof. We've seen many companies blow their budgets in the first 3 or 4 months of a year. Mass experimentation doesn't necessarily yield enterprise impact. So we're focusing in on how do you really get value from AI with clients? That's a client lens.
And so how do you get value?
You know,
it's also difficult to integrate, right? It can't be sitting outside if you're looking at AI and tech.
It's hard, right? And there are, I think, a couple principles that are emerging. You know, the first is you got to focus. If you just let 1,000 flowers bloom, you will have waste in an enterprise. And, you know, our work tends to indicate that 4 to 6 end-to-end processes in any organization, and those vary based on the industry, can drive 80% of the value from AI. So first is, are you focused? And I often ask, do you know how to double your market cap through AI? Right? If you can't do the math, good old-fashioned strategy, you're going to be inefficient, part one. Part two is you have to change the organization model. Right. And so my other simple answer to or question to a CEO is, do you know what your org chart looks like in 3 years' time? So if you can't link the value to the org change, you're not going to get the value, right? And then the last part is, how do you bring everybody along? Right? Change is hard. And if you have a large workforce, you need to create the incentives for people to want to drive adoption. You can't force folks. And so those are some of the principles that are, I think, emerging right now.
And so, Bob, what does that mean for McKinsey?
Yeah.
Right?
So,
because you've also announced job cuts, quite significant ones.
Well, you know, it's interesting. People love to latch on to half the headlines.
Not us, sure.
No, of course not. But we're hiring in record numbers, our client-facing consultants. McKinsey has 2 workforces, and the workforce that most of our clients understand are the people who live and breathe with the client, and we're growing that workforce quite aggressively, and we're arming that workforce with agents. So on average right now, every client-deployed consultant has about 3 agents, and the joke I was just with some new business analysts, the joke was, if your agents don't work all night, you will. Which I loved, right? I loved it, right? Because it was a little bit of like, hey, right, you know, you got to step up.
But give me a sense of, so how much of the workforce are you reducing that you can replace by agents, and how many consultants are you hiring? Is it like net? In
total, I think you will see our workforce now start to rise. So we've done, look, like all of our clients, we've really looked for efficiencies in our indirect processes. And there is value in that, in AI, and we're trying to liberate the folks who come out of that to then be redeployed to do new things, and also natural attrition. But we've kind of done a lot of that restructuring, and now we're actually focused on how do we grow the consulting base. I think it's an exciting time because, also there are a lot of folks who aren't really hiring a lot of young folks. And so we're like, hey, come, right? This is a great place to be for a couple of years.
And do you think face-to-face consultants are AI-proof?
Yeah.
This is what we're all trying to figure out, right?
Well, and this is for all of us. I look at what can the models do and what can the models not do. And, one of the things that starts to really rise is, I think, what's uniquely human in this. And so what we're starting to focus on is, okay, you're freeing up a bunch of time. You'll use that time to spend more of it with the client. What do you do with that time? And what we're finding are a couple things. The models don't set a goal. They don't set an aspiration. It's a uniquely human thing to say, hey, should we go to the moon? Should we go to Mars? And do we both believe in that? And so there's a uniquely human thing of how do we aspire? We're focused on building that skill. The other is judgment, right? The models don't know right and wrong. You have to train them. And so how do you work with a client to say, look, you should be the custodian of judgment in your own company. By the way, you can reference your own values. Yeah. To have the models reinforce the values of the company, that's a human thing. The humans have to impart what are the values of this institution. And the last one is working with other humans, the human-to-human interaction skills. And so we're focused on a couple of those things with our folks. And I do think those are AI-proof. I think maybe they're even AI-enabled, right, as we think about it.
That was Bob Sternfels, McKinsey's global managing partner, speaking to me a little bit earlier. Now, Stripe and Advent have offered to buy PayPal at a valuation topping $53 billion. That's according to Reuters. And you can see pre-market PayPal gaining almost 15%. Now, this is a picture for U.S. futures. A lot going on, of course, when it comes to tech. We had that ASML blowout. Now, the stocks rally in tech seems to be continuing. I guess this ASML earnings offered fresh evidence of strong demand for chips that are powering the global artificial intelligence build-out. Now, coming up, Ukraine is expanding its naval attacks against Russia in the Black Sea, including oil and gas tankers. We discuss all of this with Claudia from the German Marshall Fund. That's coming up next, and this is Bloomberg. The other thing we're watching out for is, of course, the price of oil. Oil prices rising for a third straight day after the U.S. military also carried out another wave of strikes against dozens of targets near the Strait of Hormuz. Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. The U.S. carries out more military strikes against Iran, but President Trump backs away from his plan to impose a cargo fee in the Strait of Hormuz. ASML tops expectations as Europe's most valuable company rides the wave of booming AI demand. Plus, traders cut bets on rate hikes as U.S. inflation eases, but the Fed Chair Kevin Warsh says inflation is not mission accomplished. Now let's get more on that story now. Kevin Warsh has delivered his first congressional testimony as chairman, warning against complacency on inflation.
Well, it's one data point. The reason I created a task force on data is I don't want to overread or cherry pick data. There might be some that look at this morning's data and say, oh, mission accomplished, everything is swell. That is not my view.
Well, let's bring in Alistair Bull, one of our senior editors. Alistair, what did the data and Chairman Warsh's commentary tell us actually about the outlook for rates in the U.S.?
It tells us that Kevin Warsh is a pretty lucky guy. He couldn't have scripted it better. He had a softer than expected CPI print on his first day in front of Congress. That can be a grueling experience. It turned into a pretty comfortable performance from him. And the downturn, which was stronger than expected, is sort of hardening views among smart people, including Bloomberg Economics, that inflation peaked in May. And if that's true, if that turns out to be the case, Kevin Warsh, while continuing to talk tough on inflation, can probably just sit on his hands, keep rates on hold, and as inflation gets closer to the Fed's 2% target, the conversation will start to turn to rate cuts next year. But he's not going to let up on the hawkish rhetoric because there's a lot of data to come. We have PPI coming. There's the PC, which is what the Fed actually targets, coming after their next meeting in July. And if it doesn't go in the way he needs it to go, then a rate hike is going to certainly be back in the conversation, Francine.
Alistair, I mean, what are the meanings of these Warsh task forces? And we know at the time that he's planning to change Fed communications. So is this about changing the Fed, or is it just about building his credibility?
No, it's both. I mean, he's come in saying he wants regime change, and he certainly needs to build his credibility as a new Fed chair who's arrived under enormous scrutiny on whether he can hold out against the president who wants lower interest rates and will indeed be independent. But he's not given much away. I mean, he was asked about the task forces. He said that they will report, they will give updates, and he hopes to have some conclusions by the end of this year, but he's not going to prejudge. He's not going to front run. They are in a discovery phase, and he's playing his cards pretty close to his chest. One thing we can say, though, and he was asked about this yesterday by the House Financial Services Committee, is that he's not going to pre-commit to holding a press conference after every FOMC meeting. Francine.
Alistair, thank you so much. Alistair Bull there with the very latest, of course, on Kevin Warsh. Now, the Bank of England Governor Andrew Bailey has called on the incoming government to prioritise economic growth and maintain fiscal discipline. Also speaking at what's likely to be her last Mansion House address yesterday, the UK Chancellor Rachel Reeves had this warning about the economic outlook.
The resumption of hostilities in the Middle East in the last few days has shown that our economic resilience will continue to be tested. And the market response to those changes shows that there is still work to do to ensure that our economy and our country is protected against a volatile global economic landscape.
Lower productivity growth means lower growth in incomes and lower growth in living standards. It means fewer resources are available for households, businesses, and public services. So reversing this trend and continuing to reverse this trend must be a national priority. I strongly agree with the Chancellor on this and on what she has been doing.
Let's get more on all of this with Rosa Prince, Bloomberg opinion columnist, Katherine Griffiths, Bloomberg's city editor, and Philip Aldrick, Bloomberg senior reporter for UK economics. I love it. We have like the city, the politics, and of course the economics. So what did we learn in this Mansion House speech? Katherine, you were also there last night.
Yes. So in many ways, we didn't learn that much new from Rachel Reeves because the Treasury team has briefed out this speech like nobody's business. I think she chose to sort of give really quite a political speech, which was quite unusual in this environment of sort of the city audience. I think people felt it was a weird event because likely Rachel Reeves won't be Chancellor for that many more days. There had been a hope that the Mansion House huge event that it is in the city would be delayed until the new Chancellor, who will probably not be Rachel Reeves, could give a speech and give a real sense of what is to come in the Andy Burnham government. That's what people really want to know. They want to know on the economic front what he and whoever the Chancellor is going to do, and they're not looking forward to a summer of uncertainty.
Yeah, and it's very difficult, or it's proving very difficult to have a name for a Chancellor. So we'll get on to Rosa in a second. I mean, we're expecting Andy Burnham to be Prime Minister on Monday, and we're hearing that there's still, advisors are fighting about who to pick for Chancellor.
Yeah, it's hardly the easy run-in that you would want from the new Prime Minister. It's kind of shades of the chaos we've had of the past in this final run-up. You've got Rachel Reeves, who is the Chancellor. You've got Wes Streeting, who clearly wanted to be the Chancellor but has not been given an opportunity. You've got Ed Miliband, who's the front runner, and now suddenly Shabana Mahmood is sort of suddenly the main name in the frame. And there's only a couple of days left. Really, you'd have thought this all has to be sorted out before the weekend. So, when Burnham's takes over, he's kind of off to a flying start, so that his administration is clear about what they want to do. So, I'd say this is a little bit disturbing to have this kind of chaos so close to for such an important appointment.
So, Rosa, how does it work? I know from, foreigners, especially Americans that watch us, they're always surprised that literally the Prime Minister, goes to see the monarch, the king, and then that's it. They move into number 10, like, there and then. So, Monday, what do we know the series of events? The football may also complicate things if England makes it to the final on Sunday.
Yeah, that's right. So, as you say, Britain does not have a transition period, but there is a little mini one because on Friday, Andy Burnham will formally become leader of the Labour Party. He is the only candidate. It became something of a coronation. All the other rivals fell away, so we know that's going to happen. And then he'll have the weekend to finalise his plans. Usually, it would be expected that Keir Starmer would resign, say, early on Monday morning. But with the World Cup, England potentially being in that final, if that happens, he will go to New York and then he'll have to hop on a plane and fly back, and then he will probably more likely be handing in his resignation around noon to King Charles, and then Andy Burnham makes his drive to Buckingham Palace to, we call it kissing hands with the King. These days they don't literally kiss his hand, but they will have a formal handshake, and then he will become Prime Minister, and only then probably will we begin to get the names of his cabinet and that all-important Chancellor pick.
Yeah, and that's when the real work starts. I mean, you were saying that the City of London and a lot of, the grandees here, of course, are waiting for Chancellor on economics. Do we know any, of these names, like where they stand on banks, on ring fencing, on taxes for banks?
So we don't know where they stand on those things. But so I suppose what the city's operating on the basis of is Ed Miliband, the current Energy Secretary, is on the left side of the candidates, where Streeting is sort of on the right side of the candidates. Quite a lot of the city obviously like that about Wes Streeting, though they don't like his lack of economics experience. Shabana Mahmood, I think they have really no idea where she might land on these issues. The name in the room last night was Pat McFadden, who is the Work and Pensions Secretary. He has been an MP for a good 2 decades. He has worked in the Treasury. He doesn't want to be Prime Minister. I think they would favour Pat McFadden.
No. I mean, Yvette Cooper also kind of emerged as one of the contenders.
Yeah.
I mean, is it just every name? Are you, Phil, up for Chancellor? Of course you can't, because we'd have to change the Constitution. But are we just going to have a lot of names the next couple of days before they settle on something?
It does seem so. I mean, again, I don't think even sort of senior city figures, I don't think, have an in the way that some of the sort of deeply immersed political people do. But their view, for what it's worth, is that Burnham has still probably not chosen.
Right. And this is, just so that everybody understands, is this because the Labour Party is still so diverse that they're trying to find a candidate that appeases all factions? Or is it just that they don't have a name that would be, the markets would be happy with?
Yeah, I mean, it seems like there has been this infighting within the Labour Party, and again, the difficulty Burnham is having in deciding on who. I mean, if it is the case that there is a difficulty here to decide who's going to be his Chancellor, would reflect that, as you say, the different factions in the party. Pat McFadden, months ago, he was the name that was being talked about, and he was talking to his team were talking to all the other potential leadership contenders because they were expecting to be at least a front runner. So his name has been sort of absent quite a lot from this.
What do you think Andy Burnham's biggest challenge will be? Because again, we don't really know where he stands on Ukraine. I mean, he's just untested also on foreign policy. So he has domestic economics and then foreign policy that could be wide open.
Yeah, I think it is that kind of everything all at once aspect of being Prime Minister. You're there in this 19th century building. It's not got a great infrastructure to support the leader of a G8 economy. So I think that will be a massive change for him. He's only been back in Parliament a week or so. He was running a big city, but that's very different from running a country. Just to return to the question of the Chancellor pick, I think what's going on here, my reading of it is that he would quite like Ed Miliband, who is his old friend, probably got quite similar politics. But, as you were picking up, Katherine, not very popular in the city, probably not the first message he wants to send in that important few hours. So I think he's kind of been going to and fro about whether to pick someone who's a bit more friendly to the markets, like a Pat McFadden figure, or perhaps Yvette Cooper or Shabana Mahmood. So I think that's the dilemma haunting him at the moment.
And yes, another name to the many. John Healey, who was until recently the Defence Secretary, again, there was this intriguing bit of information going around at the dinner last night that he's been out there in the city talking, so we shall see.
I mean, the other thing which I find, maybe a little bit surprising was the Bank of England governor basically urging, UK growth and maintaining fiscal discipline. I mean, this was really speaking to Andy Burnham, wasn't it?
Get your growth strategy lined up, mate. Yeah, it was. If you think about it, the productivity collapse came after the 2008 financial crisis. So somebody born that year is now an adult, and we've basically had sort of very, very weak productivity growth, much weaker than we had in the previous decades since then, and it has been the Achilles heel of the UK, and that has seeped into politics and the grievance and the issues that we've faced since then. So, Andrew Bailey's absolutely right that is the big issue. There seems to be no easy solution, and Burnham's way of addressing it appears to be devolution. He wants to get regional growth to be lifted, but it's a slow process, devolution, and it's certainly no sort of magic bullet to restore growth.
Rosa, do we know who he'll surround himself with in terms of advisors? We know Jim O'Neill's very close to Andy Burnham. I mean, any sense of what kind of number 10 kind of working processes will be like?
Yeah, well, one of the picks we know came out a couple of weeks ago was James Purnell, who's going to be his chief of staff. He's another throwback to the Tony Blair era. I think that was a good choice. He's very smart. He's run institutions in the past. He's been head of a university, so he kind of knows how to get things done. We think he'll have his two close advisors, MP colleagues Louise Hay and Annalise Midgley, and the Deputy Labour leader, Lucy Powell. She might be, we've been talking about that Downing Street in the north. She might be running that as Deputy Prime Minister. OK, so interesting. Between the football and Andy Burnham, we're going to have a really big, 5 days ahead. Katherine Griffiths, Phil Aldrick and Rosa Prince from Bloomberg Opinion. Thank you all for joining us. I have a feeling we're going to see a lot more of each other in the coming days. Now, Ukraine says it hit 20 Russian tankers in the Black Sea overnight, nearly all of which were carrying oil or gas. Kyiv has been targeting energy infrastructure to try and weaken Putin's ability to fund the invasion. Now, of course, this escalation comes as European allies prepare to play a larger role within NATO. Well, let's discuss all of this with Claudia Major, Senior Vice President for Transatlantic Security at the German Marshall Fund, who used to work at the NATO Department of the German Foreign Office. So, Claudia, thank you so much for joining us. I mean, it does seem like Ukraine, President Zelensky and Kyiv has really they've upped the attacks. Does that mean they feel stronger, or are they desperate? Claudia, I think we're having just a couple of difficulty. There may be a mute button or something like that. We'll get back to Claudia in just a second to hear. I think I can hear you. Claudia, yes. Can I hear you?
I can hear you.
Wonderful. It works. If I can hear, it's 50% of the job done. So I was asking whether Ukraine, do they feel stronger? And is this why we're seeing more stepping up of attacks?
Yes, Ukraine has been extremely successful over the last weeks and months in hitting Russian strategic targets on Crimea, in the Azov Sea, and also in the Russian mainland. That's the good news. The bad news is that this pressure, together with the economic pressure and also political pressure in Russia, has not yet translated in a Russian willingness to negotiate or even to accept a sectoral ceasefire. So yes, the pressure on Russia is mounting. Ukraine is successful, but so far it has not yet changed the Russian calculus. It has not yet changed the Russian willingness to really end the war or to enter meaningful negotiations.
Yeah. Claudia, were you expecting more from the NATO summit, but also what happened in Paris in the last 2 days, or was it anyway as good as it was ever going to be?
I mean, we have several elements where Europeans try to signal that their support for Ukraine is long and sustainable. At the NATO summit, NATO allies agreed to spend for the next 2 years, each year 70 billion euros to support Ukraine. So the signal is there is a long-term support, not just some months, but 2 years. Then we had the meeting of the coalition of the willing in Paris yesterday, where Europeans confirmed again that they will support Ukraine, and the French president announced that they were doing exercises of the coalition of the willing in neighboring countries. Ukrainian soldiers participated in the military parade in Paris. You had co-crews, French and Ukrainian pilots flying over the Champs-Élysées. So you had a very strong political and military signal. And today you have Commission and President von der Leyen going to Kiev, also to underlining that the EU support is very big. So you have in the moment Europeans trying to signal, not trying, they're actually signaling that there is a long-term sustainable support for Kiev. Yeah. Even if there are increasing doubts about the US role with regard to Ukraine.
Do we, Claudia, overall, is there, we worry about U.S. commitment? I mean, U.S. money and arms have been really far between and slow in the last couple of months. So does it really make a massive difference? I mean, do you really worry about this also because the U.S. is clearly focused on the Middle East?
I didn't hear the last element of your question. My apologies. We seem to have some technical problems. Can you maybe just repeat the last element?
Yeah, so the U.S. is so focused on the Middle East. Does it really make them a less reliable partner for Ukraine?
It's not so much the focus on the Middle East. From a European perspective, many European allies worry or wonder where the U.S. is really in its position with regard to the war, Ukraine and Russia. And if you look back, the US president tried to negotiate, tried to broker a ceasefire and a peace since he entered office, which Europeans really supported. But over the last year, we have seen many rounds of negotiations in Istanbul and Anchorage and in other places. But so far, they have not convinced the Russian president to really stop the war. In the moment, we see lots of air attacks in the nights in Kiev, and they don't only target civilian infrastructure, they also target cultural places, so the very identity of Ukraine. So from a European point of view, there is the question, where does the US stand on this war? Are they a supporter of Ukraine? Are they a moderator between Russia and Ukraine? Or might they be more on the Russian side? So from a European point, the impression is that it's up to the Europeans to assure the political, military, and economic support of Ukraine, which is in the end justified because it's happening in Europe. The Iran war is taking away attention, that's true. But I think the questions of the Europeans is far more general. It is the question, how does the US government seize Russia? If you look at the national security and defense strategy, they don't seem to see Russia as a main threat. So the question for the Europeans is more, where does the US stand on Russia? Where do they stand on Ukraine? And there are many question marks.
Many question marks. Claudia, thank you so much for your time today. Claudia Major, Senior Vice President for Transatlantic Security at the German Marshall Fund. Coming up, exuberance across equity trading drives records on Wall Street. We'll, of course, unpack a bumper set of bank earnings next. This is Bloomberg. Well, Wall Street's biggest banks have shattered equity trading records in the second quarter. We're now joined by Tom Metcalf, our managing editor for EMEA Finance. So what we learned, Tom, is that they are fine.
Yeah, I mean, what we learned is this is a huge bar for any other quarter now. You know, I think you had Diamond yesterday going, you know, he was asked, is this as good as it gets? And he was like, it was pretty damn close to as good as it gets. I mean, some of those numbers you're seeing crossing the headlines, JP Morgan came out first with some huge equities trade numbers, but then Goldman just absolutely blew them away with, I think it was 7 billion, north of 7 billion, second quarter. First time anyone's ever done that. So really interesting. I think it speaks to just how strong, you know, all the markets businesses are right now. But there was still sort of within the results some cause for, you know, at least caution among some investors, principally around costs among some, you know, specific kind of warnings the banks were giving.
Yeah, and I guess costs, it's tied to AI or some digital tokens. But what are we expecting from Morgan Stanley today?
Well, they I mean, I'm expecting, again, a very strong performance, and I think the big question is, you know, with this bar now being so stratospheric, can they actually, you know, whatever they do, is it going to kind of impress the market? Because they'll all have yesterday's numbers in mind. I mean, my sense is that you look at, you know, both JP Morgan and Goldman did well. I expect Morgan Stanley will also, you know, blow past at least its estimates.
Very quickly, costs. Is it digital tokens or is it just costs in general are rising?
It depends on the bank, right? So Citi's shares are actually down because Jane Fraser was sort of signalling, hey, we might have some more investment coming in the next few quarters. And, you know, again, everyone just takes fright at that bottom line sort of hit. And then JP Morgan as well, moving away from this, you know, absolutely blockbuster sort of markets trade. And they were saying, hey, our full year costs are actually going to be slightly higher than we expect. And again, that certainly, at least at the start of the trading session, seemed to sort of dismay some investors.
Tom, thank you so much. Tom Metcalf there, Bloomberg's managing editor for EMEA Finance. Now, Swiss luxury retailer Richemont has impressed investors, lifting the wider luxury sector. First quarter sales have grown nearly twice as much as expected. So let's get more from Bloomberg opinion columnist Andrea Felsted. Andrea, is this all about U.S. demand?
Yes, US demand is a lot of it, but Asia seems to be doing, you know, Asia's going in the right direction. China particularly seems to be going in the right direction. South Korea's been good because of the AI boom, but yes, it is principally US.
And so what does it mean for the luxury sector at all? Is it because Richemont has great products, or is there just a revival for luxury in general?
I think for luxury, it shows luxury hasn't fallen off a cliff. Obviously, with the Iran war, there was a worry that that would, you know, hurt demand, not only in the Middle East, but more broadly. We tend to buy luxury when we feel happy, wealthy, confident, and that wasn't really helpful to sentiment. So not falling off a cliff, but I'm not sure anyone else will be as good as Richemont. Richemont is in the right place. It has jewellery, which has been a really great area. It has Cartier, fantastic brands. And in the jewellery numbers, we have Cartier watches. We know Cartier watches have been doing very well. That shift from big sporty steel watches to smaller gold watches, the Panthère, the bangle watches are becoming more popular. So it's definitely in the right place.
I mean, if you look at the watches are doing great, I guess, especially for female.
Yes.
How does it compare with, for example, high-end, you know, beauty products or the bags?
Well, the bags have been a problem. Leather goods have been an issue for the luxury brands because they put up prices so much. Plus, there wasn't much innovation. They relied on their older styles, so there was little reason to buy. But we've seen, you know, with the incredible success of Chanel, we have seen that when a brand gets it right, when there's innovation, when there's excitement, customers will buy.
Thank you so much, as always, Andrea Felsted there. Bloomberg opinion, of course, focused on luxury. Now, this is the picture overall for U.S. futures. Again, yesterday was a big day. Today we have a lot of tech stocks, you know, that rallying, or tech stocks in general, leading equity markets higher after ASML earnings offered some pretty fresh evidence of the relentless demand for chips enabling this global AI build-out. The other thing I would say is, of course, we had Kevin Warsh yesterday, and, you know, consumer price data on Tuesday delivered pretty strong downside surprise, and that really prompted traders also to dial down expectations for near-term interest rate hikes, and that's giving another boost to equities. Up next, Bloomberg Brief. We'll have, of course, a full roundup, a little bit of football, but also markets. This is Bloomberg.